Hey guys, it's Janelle here again at the Rent Reporters HQ. I'm here with our CEO, John. John, how are you doing today?
I'm great. Thanks for having me again.
No, yeah, love to have you. In last week's episode, we talked about credit tips for young adults. If you didn't get a chance to check that video out, the link will be in the description below. In today's talk, we're going to dive into some credit strategies along with credit myths. So John, let's get started.
I'm looking forward to it. What do you got for me?
John, what are like the 5 main factors that build, your credit?
So when you're thinking about your credit and your credit score, it really is common sense. You may not like what it has to say, but it really is pretty common sense. So we think about the first thing, it's do you pay your bills on time? If payments due on a particular date, did you make them on time? Pretty straightforward. Totally within your control. Length of history, something out of your control. How long have you had your accounts? The longer they've been around, the more likely, the better your length of history. A bit redundant, but the idea is the more history the credit bureaus have to look at or lenders have to look at, the more they know that you're reliable. So again, pretty common sense, but again, for young people, that means getting started sooner rather than later because you can't start counting your length of history until you have one, okay? Third, credit usage percentages. This is something that jams me up all the time. You have a credit line on your credit card. What percentage of it did you use? Less is better, more is worse. Ideally, you're sitting in that 1/3 range. So length of history, paying it on time, and your credit usage percentage. Now we get into things like the mix of your credit. Lenders want to see that you're using multiple sources, not just relying on credit cards as an example, or having that as your only item. You want to have a mix of auto loans, ideally credit cards, and for others, having a mortgage. But again, the credit mix, you want to see a little bit of a little bit of diversification there, if you will. And the last thing is how much credit have you been adding lately? If you're running and trying to open up a bunch of accounts, lenders are going to say, holy cow, what's going on in that cat's life? Why is that all of a sudden you're trying to, get a bunch of credit? So that's going to work against you. So again, those things, generally speaking, the 5 things, pretty intuitive. And some things, again, you may not like. You got to pay your bills on time and keep the amount of credit you're requesting lower. One of the things that comes up is hard credit pulls versus soft pulls, and be thinking about that. Soft pulls don't hurt you. They aren't going to think that you're applying for credit. That's when you're checking your score. Hard pulls are when lenders are contemplating giving you a loan or extending credit. Those are going to work against you. So 5 things, keep them in mind.
Got you. So yeah, you mentioned great points. I think one of the biggest points that's, stuck out to me was, history of your credit. Would you agree that that's like the most important thing, or is there something that you find within those 5 that, sticks out the most? That's, the most important.
Number one thing is pay your bills on time. You don't got a fighting chance if you're not paying them on time. But then again, that history, it only helps. And again, thinking about that mix, the idea isn't to go take out a bunch of loans to create a better mix. It's one of those things of, even though I say it's all intuitive, that one probably isn't, frankly, as intuitive to me. And it's a little bit out of your control. Don't take out debt to get a better score.
Yeah, no, definitely. Paying bills, it makes sense. You got to do them. But as humans, we make mistakes, and I've missed a bill. My mom missed a bill. It happens to the best of us. What I want to know is what are, the potential drawbacks or the repercussions that you face when, you miss, that one statement.
So I don't want to encourage anyone to go miss a payment, but one of the misnomers out there, and frankly, I didn't understand it until a few years ago, is that you're not late until you're more than 30 days late. So if the statement was, if your payment was due on the 1st and you miss it by a day and pay it on the 2nd, that's not going to hurt your credit score. Now, I'm not giving you a pass because if that's a credit card, you're going to get jammed on interest big time. You missed that payment. Not only is that last bill subject to interest, but every transaction from that moment forward is going to be hit with interest, even if you pay off that next statement on time. So it's, the late payment itself won't jack you, but there are other ramifications. So do your best. And then if you do have a situation with the bank, I'll be honest, I just actually had it yesterday. I had a new credit card with Bank of America, and I thought I had set up auto pay. I had it. The date came and went. I went and paid it right away. And then the next thing I'm going to do is call up Bank of America and ask for forgiveness so they don't whack me with interest. So don't just be a victim, advocate for yourself. And, if you haven't missed before, they're not going to give you a hard time about it. But yeah, definitely don't take that interest hit if you don't have to.
Got you. So let's say in the event that, you do take that interest hit, are you still going to get reported if you ask for forgiveness, or is there, that risk that that's still going to get reported to the bureaus that, hey, you missed here?
Well, again, 1 day is not a problem. It's 30 days that matter. So the credit card company can't undo what you've done. All they can do is affect what's on their side, your interest, a late penalty, that sort of thing. And when I said go ask for forgiveness, don't forget to get the penalty waived as well. Yeah. Make one good ask as a good customer.
Yeah. So, going back to my first question where I asked about, history. History in my mind is only possible if you start, fairly young, fresh out of college, early 20s. For someone like me, I'm a new grad, and there's people within my circle that, hey, they don't have a credit card. And there's some people as far as their late 20s and they just got their first credit card. For someone who's that fits that demographic, what strategy do you recommend? You're 28, you're 29, you have your first credit card. You probably don't have much of a history. What's the fastest way, to get some points and rack up some credit?
What's interesting about your generation is credit cards aren't all that important. And I would say you got to rethink that, because it's the first opportunity you have, for at least in a mainstream sense, to start developing and building your credit history, that length of credit history. The credit card is not a bad thing. It's actually a phenomenal thing in helping you build. You just need to use them responsibly. And that means, you only use it for the things that you can afford, the way you would have used it if you were pulling cash out of your pocket or your debit card. So I think getting that card sooner and then looking very methodically to increase that credit line, continuing to ask for credit line increases as often as they will allow. Generally that's 6 months. But the higher that limit, the better shape your credit's going to be in. Particularly as you think about your credit usage percentage, but you also want to demonstrate that you've been able to use that limit responsibly.
So you brought up, the ratio between your credit limit and your actual spending. Let's say, for example, just a friend of mine maxes out their credit card, but they pay on time. Are they, based on what that ratio would look like, they're spending basically 100% of the limit. Are they facing any drawbacks, or are they kind of just at a standstill of what their credit card potential could be? What does that kind of look like?
Unfortunately, they're a little bit in my camp. I get dinked on that all the time. I pay off my balances every month, but I have business expenses that go through my credit cards, and I will get a notice saying, oh, your score went down this month because your credit usage percentage was so high. So absolutely, that's the wrong way to approach it. First of all, I don't like the idea of maxing out. Spend less. But if you need to do that, you still have control. What's it meaning? That if you had a bunch of expenses that month, they're all legit, and you're going to pay it off earlier before that statement closes. If you wipe that balance out or bring it down to that 1/3 before your statement closes, you're going to be just fine. But you let that statement close, that's what gets reported. That's when you're going to get dinged.
I see. So just so I understand, you're saying, let's say, you're pushing, 90% of your usage. You're saying split it up. So, early on in the stage, pay a set amount, and then somewhere in the middle of your statement, you pay another amount, but you're not paying the full amount. You're just trying to get it down to that 1/3 range of your limit, correct? Is that right?
Exactly. And you can approach it. There's no magic to it. It doesn't need to be ratably through the period. It can literally be the day before your statement closes. It's just when that statement closes, you want that balance to be no more than 1/3 of your available credit.
Yeah. I think another sort of demographic within our community is, as young spenders, is department store credit cards. And I know that when you go to like the checkout, they say, hey, you sign up for a credit card, get 10% off, get 20% off, whatever it is. There is a catch. I just want to know your thoughts on those. If you had, any experience with department store cards, what are your thoughts on department store credit cards?
So as a young adult, I probably had 4, and they become a bit of a burden over time. I would, if it's the only, let me step back. Often those rules can be a little more relaxed than the major credit card companies because they have an incentive. They want you to use it at their store. But I would much rather have you stick with mainstream credit cards, of the major banks. Just make the investment there and not have to keep track of a bunch of stuff in your wallet. And one of the things I hate about the store credit cards is that you then have a reason to go spend money at that store. And I just fundamentally don't like that. I'd much rather have an Amex, a MasterCard in your wallet than a Nordstrom's card or a Target card, with all due respect to a couple of great brands.
No, yeah. Oh, great. You brought up earlier hard and soft inquiries. I think a lot of people our age probably wouldn't know what that is. If you can give a quick explanation of, what a hard inquiry is and what a soft one is, that'd be great.
So think Credit Karma. If you don't use it, I hope you do. It's a great product. It's a great way of keeping track of your credit. So when you go check your Credit Karma score, that's a soft pull. There's no impact on your credit. When you go and apply for that Nordstrom credit card, that's going to be a hard pull. That's when we talk about those 5 factors of credit and, how recently you've been applying for credit. That's those hard pulls. That's what's going to whack your credit score.
I see. So let's just say if I have, 10 soft pulls from my own personal inquiries, that's not going to have any damage on me. But if, let's just say I go to like Fletcher Jones at Newport Beach and say, hey, I want to finance a new car, that's something that you're saying is going to, possibly have some drawbacks on my credit.
Absolutely. And it's, what I don't know, and it's a great point. I don't know whether the source of the pull matters, the new car versus the Nordstrom's credit card. Next time I'll be in a position to answer that, but it's thought provoking for me. I would think they would, if you're pulling down a $50,000 loan versus a $3,000 credit card, I would think there'd be a difference, but honestly, I don't know.
Oh, good. Yeah, I think we talked a lot about, this conversation has been kind of shifting towards like credit cards. I think a big strategy is credit, diversifying your credit. That's a big contributor to your credit score. Do you have a strategy that you use, or like a rule of this is how many loans I have, this is how many credit cards I have, just something that you can share?
No, I really wouldn't look at it that way. When they create a rule and say, oh, your score is better if you have this, it's, kind of human nature to say, well, let me go do that. I don't want you taking out any credit you don't need. And I think just going through life as a young person, that mix will come naturally. If you start with that credit card and then maybe you're ready to buy a new car and you have that auto loan or that lease, that's going to develop the mix you need. Just don't be a one-trick pony, I guess, is my point. And when you're looking at, loan products, just think about being responsible. Again, don't do it for your score because, it's costing you real dollars. Just be thoughtful. So, I guess to take away, Janelle, thank you so much for having me today and sharing some of your questions. I really appreciate it. I guess the way I would leave it, for young people who are out there looking to build their credit, I really do believe get that credit card sooner rather than later. And look to be thoughtful about the card you're getting. Maybe it's an Apple Pay product. Maybe it's a credit card where you already bank. Both of my children got their first credit card through Bank of America where their checking account was. So think about that. But most of all, be responsible. Don't look at that as an opportunity to spend money. It's just a tool for you to build your credit. Use it for purchases like you would use your debit card, but don't go buy stuff. Certainly don't do what I think I did as a college kid. Go throw it down at the bar for drinks for your friends to show off. Don't do that. Use it the way you would have otherwise. And don't give freebies to your friends.
Thank you so much, John. Look forward to the next one.
Thanks, everyone.